Hello, Charlie Redding, the founder of Efficient Portfolio here. Welcome back to the Client Case Studies series. In these videos, we're just sending you quick videos to show you how we've helped particular clients and giving you case studies so that you can help get an insight into what we do and help you can spot the opportunities within your own client base where we can add value to your service. So in this particular client example, I want to talk you through, this was a business owner. And this was a fairly organised business owner actually. They'd already got pensions, they'd got some shares, and they'd got some cash put aside. So they'd done a good job, they were making good money. But what we started to do when we first met them was to talk about and understanding their concerns was they'd obviously got too much money in cash. They knew that. They knew it was being eroded by inflation. This chart shows you the effective inflation over the last few years. The blue line that runs along the top is the real value of the money. So that's the inflation line, and the line below it is the money that even if you chase down the best savings rate each year, the impact it's had on your money. So they knew their money was falling in real terms that was sat in cash. They'd got some money invested and they'd put some money in pensions, but it was very ad hoc. And in fact, most of the shares had been inherited, as is often the case. So one of the things that they were really wanting us to do was to help them kind of reorganize their money, to get their money working in the best possible way, to get the best returns possible for a level of risk they were comfortable with. And so that involves going through a behavioural finance assessment where we can really understand what their psychology is as an investor. Are they attracted to gains? Are they worried about losses? Do they get worried when the markets go up and down? Once we know that, we can then design a properly customized portfolio for them so that they can we can get the best returns possible for the level of risk that suits them. And the way that we achieve that is by giving them a diversified portfolio that will have shares, bonds, maybe some cash and stable assets, maybe some property, maybe some commodities, those sorts of things combined to give the best returns for that level of risk. So by doing that, what we can then do is we can say, well, actually that approach should be applied across the board. We don't want some money in pensions that's invested in certain funds and then some money that's invested in shares in a different way and then some money that's in cash and some other investments. What we want is one cohesive strategy across the entire portfolio. And the way that we achieve that is by putting the money onto a wrap platform. That still gives us the different tax wrappers of the pension, the ISA, the direct holdings like the shares, and other wrappers as well that we may need in the future. But it allows us to have one centralized investment approach across all of the money, which means that they can log in, they can see all their money in one place, they can still benefit from the individual tax wrappers, but they have one overriding investment strategy across the whole thing, which means that it's much simpler to understand, much easier to keep track of whether it's doing well or not, and it's just a much smarter way of investing. So for this client, we were able to design a portfolio that did that. But this client was doing very well. They'd got a good amount of money in pensions, ISAs and cash. But what the lifetime cash flow forecast highlighted was if they carried on going as they were actually still on track to run out of money in their 90s if they lived to age 100. You see this red at the end here? That's indicating that they were on track to run out of money later on in their life, which we should be able to avoid given that they'd got good income and good capital. And the reason that we can see that happening is looking at the liquid assets chart, we can see that their capital was being spent over the course of their life. But by reorganizing things, using up their tax allowances better, we were able to eliminate the red from the income versus expenditure charts, meaning that if they live to 100, then they'll actually have enough money for there and beyond. But more importantly, if we look at the liquid assets chart, instead of, if they live to 100, their children inheriting none of these investments, none of this money, their children now stand to inherit an additional £1.4 million in today's money. So that's eliminated the effect of inflation. Today's money, an additional £1.4 million, just as a result of taking the advice that was in our efficient financial plan. And what we were also then able to do was design a bucket list income again to say, look, even if you do all of these cool things at the start of retirement, we can still make sure you've got enough to age 100. So what did that look like? Well, first thing we needed to do was invest the cash that was sat there into the diversified portfolio. What we then needed to do was kind of move the existing pension across to the same platform and get that invested in the more diversified investment approach. What we then wanted to do was start using up the capital gains tax allowance each year, because that was remaining unused. So we used a personal investment portfolio to do that. And that also can help fund the ISA allowance if there's insufficient income in future years. We were able to put a lump of money into the pension scheme. Normally you're capped at £40,000 per annum into the pension scheme, but this person hadn't been making the most of that in previous years. So you can actually use up, in certain situations, you can use up the previous 3 allowances as well, which currently means that you can potentially put up to £160,000 into your pension each in one go, which we were able to use for this person. So really claw back a load of income tax and get that money growing more tax efficiently. So we're able to do that, which is really powerful planning when the opportunity presents itself correctly. And then we were also in a situation where there was a load of money in the company, which essentially will form probably future pension contributions, but they didn't want to take that money out of the business yet because it was just going to incur more tax problems than were necessary. So what we were able to do was put in a corporate PIP, which is a personal investment portfolio, but sat inside the business. So it works in very much the same way. It's still the money's still invested, still in that same investment approach, but it just means that it sat inside the company as opposed to outside the company. So many businesses are sitting there on lots of cash, and it's been getting probably 0 interest rates on that cash. But having a corporate PIP allows that money to grow much better and get and at least get it working for you, so that in the same way that you would have done had you taken it out of the business. And so therefore it doesn't matter when you take it out or if you use it to make pension contributions later on. So it's really powerful planning, and all of that is what led to fixing the lifetime cash flow forecast problem and taking them from a situation where they were going to run out of income and capital at age 9 in their mid-90s, compared to their children inheriting an additional £1.4 million even if they live to age 100. So that's just another example of how we help people, really just kind of bringing pensions together, investing cash, minimizing tax, looking at pension opportunities, investing the money across the board, and giving them clarity through lifetime cash flow forecasting. So as always, if there's any clients that this kind of jogs your memory for, and you think maybe the efficient portfolio could help with this particular person, maybe it's a completely different situation, please drop us a line. We'd love to just understand a little bit about that client, make sure that we can help them, or indeed just introduce them straight to us. We're more than happy to do that, and then we'll give them a free finance call, make sure that we can help them find the best financial planner at Efficient Portfolio to help them, and then we can set up their free exploration meeting that they're entitled to because they're a client of yours. As always, if we can be of any help, please don't hesitate to contact us. Until the next one, have a great month.